Mortgage rates have a big impact on conversion rates. And what we've seen is over the last couple of years, as mortgage rates have risen, decrease overall in conversion rates. There's a few important nuances. One thing that we've noticed is lead volumes have not gone down. So as rates go up, lead volumes really are not impacted too much. There's still plenty of activity and interest out there. The conversion rates go down, depending on the increase in rates, can go down as much as 30, 40% in aggregate month over month. That's a pretty significant decline. That's pretty steep. But typically what you see is if you see a 50 bip increase in mortgage rates, you will see about a 20% decline in conversion rate. The other important thing to note is it's not necessarily about where the rate is. It's about the trend of the rate. So as rates are going up, that's when you really start to see the degradation. Once rates flatten out, you see a recovery in that overall conversion. And then as rates move down, they don't need to move down a lot. They just need to stay flat or start moving down. Then you begin to see an increase and a recovery in that conversion rate. And that really brings me to the third point here, is that as interest rates fluctuate and conversion rates fluctuate inversely to those, ultimately, those things tend to stay flat over time. So as much as we panic in the near term with lower conversion rates, higher rates, ultimately, as long as there's a relatively steady trend in rates, we'll see the same thing in conversion rates. And as long as we can all take the longer view, which is not always easy to do, we will be fine.